Yo, what is up, guys? It's Hunter here, back at you with another valuable video. Before we get started, what I want you to do, I want you to smash that like button, smash that subscribe button. It just helps Joe and I with the algorithm of YouTube so we can reach more people. While you're doing that, you can ease over to Instagram. You can ask us some questions on what you're struggling with. You'll be able to reach us there a lot easier and things like that. We'll respond a lot faster, right? So also, go to our Telegram. It's in the comment section below. Go join that. It's free. I drop charts in there. I know I've been saying it. I will be dropping some signals in there soon. Okay. I've been talking to Joe about it. If we're going to do a full-blown signal deal, and it's going to be free. It's not going to be any charge. I just want to do it effectively, right? Because I know signals are very harmful to people. I just want to do it in more efficient and better way than usually what people do. And we might come to the conclusion that it's not going to work, right? I just know that I want to deliver because I know the trades that we're taking with our team. If you're not joining our team, I know they're hitting good. So, and our team is killing it. So, with that, yeah, go to our Instagram, follow us there. In the meantime, let's get into the meat potatoes. I'm going to be talking about shark fin strategy, guys, TDI, liquidity, things like that. I'm about to give you something that you can carry with you for the rest of your life. Okay. It's easy, it's simple. You wait for this setup, and I promise you, you're going to reap the benefits of it. Okay. Just wait for this thing to happen with the trend. Okay. Do not get overconfident. Don't get into a state of mind where you start smoking some trades and then you think that you're God Almighty and you can do anything. And that's when the bad stuff happens. That's when the market will humble you. Okay. So I'm going to share my screen. Boom. Cool deal. So as you can see here, we're on gold. I want you to pay attention to the trend. Okay. You can see here that we had a high and we were making lows, lower highs, kind of equal here, lower highs. The market was gradually moving down. Okay, we're under the 200 on the hour time frame. You can see that. Okay, but I want you to pay attention to all. I'm going to mark up every one of them. Okay, um, just down here so I can see. Yeah, there we go. Okay, so we broke down. We got that. We got this. And guys, everything, I want you to write down notes, okay? Everything applies. Okay. Let's see. None. Okay. Here. Okay. Now I want you to look at that. Over yeah, 2 weeks of period of time. Look what happened in in a 2 week period of time. Look at all the trade setups, flawless trade setups that you could have set up to. Okay, we'll go to the daily time frame and you can see where gold was headed. Okay, it fell into the low here, and I'm sure there was, right here an order block that it was coming off of. You see this last bearish candle for a massive move. It filled the imbalance and hit the order block and bounced right off. Okay, it did not take liquidity. I didn't like that. I was really trying to go down there and take the low out and then maybe move up. So, but you can see here, I'm going to go to the 30-minute and I'm going to mark up the same things. Okay. We already got the ones we want, but I want you to pay attention to um, if you see any more. Okay. 30-minute. I'm on the 30-minute. I'm going all the way back to this day. Okay. We don't see any more. Okay. Now, I'm going to indicator list. I got to do this because we're going to put everything together. Okay, so I'll just go back 7 days. No, I'll go back 10 days. Okay. Now everything here is going to have something to do with timing. You gotta have the timing aspect on point. If you're not in your timing, then the trade's not going to be valid, right? This is where it's going to nail you down where you're disciplined with this trade setup. Okay. Always know your timing. Timing is everything in this market. Are you trading London? Are you trading New York? Okay. Then you have to ask yourself, where are you going to trade, right? On the timing aspect of it. Then where are you going to mark out the liquidity areas and watch this play out? Watch, you're gonna mark out, the highs and the lows that it created, accumulation phase, right? And then watch price manipulate price, take money, take liquidity. And once you see that, and then you see the pattern, it's game over. They just showed their hand. Now you can execute, right? So you can see here, as you can see, this wouldn't have been a valid trade. Why? Because it wasn't in the timing. Wasn't in timing. It was after hours, right? In New York. Look here. Boom. Right as we get into New York, we get a trade. We're going to break down the lower time frame. We're going to map these out. So what I'm going to do now is I'm going to drop down to the 15-minute time frame. Let's see if we see any more. Okay. You can see here. Okay. Let's see. You can see here. Here's one shark fin here. We're moving down. We pull into a point of interest. Guys, this is the same thing. We'll map it down on the lower time frame. I'll show you. Okay. This works. Okay. None here. That one's there. That one's not there. Okay, cool. That one was out of timing, even if after it took liquidity. We can even go down the 5-minute, and I'm pretty sure, as you can see, we'll mark this one out here. I know this one is a 5-minute shark fin in the direction of the trend. So we ran up, we induced people up, shark fin down on the 5, give the pattern, and drop. We went back into a point of interest. Also, you can see how it ran down first in New York and then ran up and took out a intermediate high and then set the trade, right? That's what we're looking for. Okay. So you can even see here, I'll show you on the lower time frame how that played out. Okay. So now let's break down to the lower time frame and let's take these trades. We've already identified what? Higher time frame buys. Boom. We already identified, boom, our perfect trade setup is starting to form, right? It's already took in liquidity. We're in our timing. See how you're breaking this down? You're breaking this down to like a 4 to 5 checkbox of confirmation, and then you just take the trade. That's it. You take the trade. Quit getting scared. Take the trade. If you get stopped out, analyze why you got stopped out and take the trade again, right? So you can see here, let's go from the start. I'm gonna break this one down just because. Okay, so we'll go to the 5-minute on 11th. Oh man. Okay, no, it's not right. That's not right. Okay, here we go. You can see here, we started to move up. Okay, we shark finned out. What did we do first? We got the shark fin, right? We're in our directions down. We took out liquidity, right? You can see here in London, here in London, we took out London liquidity. We set a pattern and it was equal highs right there. I'm like, I'm not even going to touch it because I knew right away that we could potentially go back up there and smash because it's stopped at Asian high because it made a high and this wasn't beat yet. So I was like, all it's doing is engineering right now. And once it broke above and set the shark fin, I was like, cool. Now let's look at it. But we didn't take it because it was out of our timing. We're trading in here. We're not trading out here. Okay. But you can see here, look at the divergence created. Oh man. Look at the divergence created. Okay. You can see it right there. Look at the divergence created. Okay. So on the 1 minute, we could have easily, let's go to the 1 minute. On the 11th. Oh, okay. No, that's not going to work. Let's do this. Let's go back. Okay. Let me see if I can get here. There we go. Okay. So you can see here, we started to make this little wedge, whatever you call it, right? And then we broke down and things like that. So what I would have been doing is I would have been like, okay, it's making lower highs. Okay. That's cool. It's not breaking down. So I'm looking at lows. I can see I've got imbalance down below. I'm looking at lows and I'm waiting for a break of structure. I'm waiting for a break of structure. There are places where you can get in early, which I'll show you. But the safer trade is to wait for the break of structure because Once it breaks structure, then look what it leaves. It leaves an imbalance. It drops. I would wait for the imbalance to get filled, and then I'll execute. Right? That's the safer trade. Or you get the second leg. I'll show you on a better trade, but you'll get the leg like this. Let's see. Let me annotate. Right here, you get the M pattern, right? Come down, comes up, takes that out, and then once it closes below the 13 EMA, which would be like right here, you can execute the trade, right? Because you've already taken liquidity again, right? And it's grab liquidity and pull back in. And it's good to watch when it hits the liquidity, when it hits that high, watch it wick out really hard. If it wicks out really hard and pulls back in, and then the next candle or the next two candles gives you displacement really fast, then you already know. You already know what they're doing. Okay. So on to the next one. So our trend's still down, right? So let's go to the 5 so we can really dial in. Okay, so here was news, and this is what I'm talking about. You see how, engineered liquidity, boom, 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 real small candles, and then we get right at almost into New York. What do they do before New York? Smash, grab liquidity, and then they give you the trade. This is the exact same trade that I was just telling you about. Okay, so it engineered left leg, neck, right leg, took out left leg, and it gives you displacement right here. So you could have entered right here or got down on the 1 minute time frame and waited for it to hit a imbalance to take the trade, which it did right here. You can see. Let's look at it on the the 1 minute time frame on the 13th. Let's do that. Okay, so we gap down. So the 1 minute never really gave it, which is fine, which is fine, which is fine. That was news. So you guys probably would have never been trading it anyway, based off news, but that's okay. Okay. So you can see here the next day, look. So now we're in a lower time frame and now we're moving down. We accumulated, London hit the highs and we dropped down, broke structure. Now what are we looking for? We're looking for a pullback to get into. Do you see right before New York? Look what happened. They ran it down. They come up. They hit this high, grab liquidity, grab people that were already selling, pulls back into what? Pulls back into more imbalance. And what? This is the thing you have to pay attention to is there's points of interest here. So you can see, I know that looks cloudy, but you can see this last bullish candle on the 5 minute. Okay, that's an order block with the imbalance right here, as you can see. We'll zoom in on that. Right here. Okay, pulls into that. You can see here, pulls into that, pulls into that. Soon as we get the drop, we can close below the 13, or you can wait for a pull back into it. If everybody got this one, didn't give you that, and you could have closed below the 13, okay, and then set your stop loss, and then let the trade play out. Okay, take out liquidity. Your targets are liquidity, guys. Your targets are liquidity and big key institutional areas. So like 1645, which would be 1650, 16450. You got 4400. You got those big levels where price like 1650 right here, 1650 00 right here is a big level, and you can see where it stopped at. Okay, if you got into a trade right here, you had a 60 pip stop. This is gold. You had a 60 pip stop loss. I know that's kind of high. Volatility's up right now, and then look what happened. You got almost a 1.5 to 1, which is cool. I mean, that's not bad. You know what I'm saying? You're not going to get these 5 and 10 and 16 to 1s all the time. It's just not going to happen, right? So you can see here as we roll into the, and guys, we've already broken everything down. What were these trades? Okay, these are liquidity grab shark fins. Okay, the shark fin is literally telling you where the trade is first. Okay, so like right here, this is a 5 minute shark fin. You've seen it. See, let's go back. You can see 5 minute shark fin takes out liquidity, boom, drops. And you look, direction, boom, gives you the shark fin, takes out liquidity, pulls into a point of interest. That's all you need. Close below 13 and enter the trade. Enter the trade. boom, gone. Okay. Same thing. We roll into the next day. You can see here, we'll go back to the 5 or 15. Right here, you can see here, look at this imbalance. Okay. We pull into the imbalance, we create a shark fin. You can see that that last candle hit that high, the little high that it made right here, and look what it did. This is a 5-minute in pattern on there in a point of interest in the direction we're going. You could have got on the 5. Let's see on the 5. Okay, you can see that it hit the high. You got on the 5, and then you got into the trade. Close below the 13, boom, 30 pips, boom, 60, 2 to 1, out, done. Okay. Okay, same thing. Same thing. Accumulation. You can see accumulation. Look what it does. It accumulates some more, hits the high. Okay. This right here would have been a good scalp. Everybody, if anybody got into it, been a good scalp, right? But you got busted. Okay. And look what happened. It gave you an extra entry. So this is the left leg. We come down, make the neck. We hit the highs one more time, and then we drop down. I would have took this trade just right after the New York close. I would have still took the trade and hit, because you can see the good displacement that it made. Okay, so we'll go back to the 5-minute on that. You can see here, right here, good displacement. Look what pulls into it. So once we break down, if you didn't get it close above 13, look at this. Pulls back into what? Imbalance, and then see you. Okay, so that right there would have been a really, really tight stop loss for gold. 28 pips, go down to the low. Look, 136, but look what level it is. 16,300. That would right there would have been a perfect. Okay, not only do we have liquidity, we got liquidity at the bottom of London, we got the liquidity at the bottom of Asian. There's multiple areas that you can take profit. You have to be comfortable with what you're comfortable with. Okay, is a 2 to 1 good enough for you? You have to put that in your trading plan. We can't map everything out for you. You're gonna have to figure that out on your own, right? But you got to think about it. 2 to 1, 3 to 1. You're doubling the trade, and you're tripling the trade. Where else in the world are you going to be able to double your money or triple your money? It ain't happening, right? I'm okay with getting my little buffer is my minimum is 2 to 1. My maximum is 5 to 1. If I hit a 5 to 1 trade, I'm not letting it run no more. I'm taking my money and I'm getting out of the trade. I'm getting out, and I'll wait for another trade the next day, right? That's just me. That's just how I trade. Do I hit all those all the time? No. My average RR is 3 to 1. That's my average. Okay. So because the trade sets up as, if I'm in here, boom, I set a 30 pip stop loss. Okay, there's 60. There's a 2 to 1. Okay. Where's 90? There's a 3 to 1. Okay. Then where's 120? There's a 4 to 1. So that 4 to 1 trade hitting that low, I'd have been done. I'd have been done. I would have smoked out of the trade. Okay. So the next day you can see here, accumulation. This was today, and you can see that we shifted. Okay. I know this would have been difficult because of the accumulation, and then it just took off. I know this right here would have been tough not to take just based off of liquidity grab. But sometimes, guys, you're going to get caught, but you have to pay attention to the higher time frame, because this right here was at a significant low. Okay. So you need to understand now what's your objective for the next day. We're going to what? Going to accumulation phase. What do you want? Stop hunt low, right? You want them to manipulate price and then catch the trade up. Okay. And it's just like in this trade here. Let's just say that plays out tomorrow and you get the bulk of the trade. Okay. So the bulk of the trade would be all this. What I want you to do after you catch the trade and it starts to move your favor, going towards what? Going towards liquidity. Okay. Taking out highs. If it's going to move, right? So if it's going to accumulate right here and drop back down into this order block, okay, and we catch the trade back up and we start to go after this high or maybe another high to the left to take out liquidity, what I want you to do is look inside that bulk of that move and start to look for scalps. Okay. And then that right there is money, right? So like, let's just say this is the move for yesterday. I mean, tomorrow. You can see here, now that you're moving away, Okay, now you're looking at your swing points. Now you're looking at points of interest. You left the imbalance here. Boom, we rose up. It left the order block here. So this should hold price up. So let's go from swing to swing. So I'm on the 5 minute. I'm going to do the last bearish candle for go to swing. Look how we roll into the 62%. Okay, and it pulled into what? Let's go to the 1 minute. Okay, sorry about the trucks outside. I'm in a motel right now, but you can see right here, we pull into right here, 62%, and then we rise. You can either took in that trade here, close above 13, taking that trade and take out the high, but you can see here, boom, 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 boom. What did it leave? Imbalance, and what did it come back to? Right there at the imbalance, and there's close above the 13. Wow, take out the highs. There's a, this is scalping. This is not a holy grail. So you can see here, we made high and made a low, and then it made a high, took out, and it's even better when you take out structure, okay, on the swing. So right here, swing, okay, took out structure. You can go here, put your fibs on it, okay. It has to leave a footprint, okay. It has to be discounted price if you're going up. It has to be premium if you're going down. So you can see here, it left the imbalance, boom, pulls down, gets into, because I see I wouldn't have took a buy here. Why? Because there's no points of interest. It needs to fall into this fair value gap right here, this imbalance. So boom, it pulls back into there, close above the 13. See ya. Take out the high. Scalp. 20 for 40. There you go. Name of the game right there. So I just gave you the sauce. I gave you everything that I look for on a daily basis. Trades that I wait for. Do I get stopped out, guys? Yeah, I got stopped out today. I got stopped out on gold. But then I turn right around and I analyze where it's going to go, and then we start to do more due diligence on where the trade's going to go, and then we were able to be a part of that buy here. Okay, so just like SPX, right here, it's just really simple, because not only where if we go to the daily time frame, you can see where is this price going. You can see that we made a low, pulls up, makes a high, pulls down, takes the low out, pulls in. So my objective on the higher time frame is that high. This high is what I'm looking forward to. So now if I'm starting to move up, I want to look for the most high probability buy setups to get to that high, right? So you can see, let me see, get you over here. You can see here, look, we rose, we pulled back, we could have taken the buy here to continue, right, to there. All right, and that right there was perfect. But you can see here, I want you to pay attention. Look here, right there at that imbalance, and it's all about points of interest, liquidity. That's what this market's about. You have to understand. Okay, so we did a swing, right? We broke structure. Put the fibs on here from swing low, swing high. Okay, look what it came down to, 62. Okay, 62%, and look what happened. It made a little W pattern right there, pinged off of it, filled the imbalance, and left. Okay, so we'll go down to 1 minute, and you can see right there, imbalance. Okay, this last that all of these little candles ends up being a one down candle, right? And this would be the order block, and you can see that it came to it, but it left the imbalance right here, so it's even better. And then boom, there's your trade. Take the high out right there, 462 pips. Okay, that's what you're looking for. It was almost a shark fin right here. And this one was. So if you end up getting right here and you put your stop loss below the imbalance, that's fine, and you never got hit, and you end up reaping the benefits. Okay, so that's what we just keep doing. Keep doing that, and you'll win. You can see here, as I was looking for buys, right? So we accumulated, we stop hunted low, right? I understand we had the sell off yesterday. I'm sure that this whole big move down was to grab more liquidity before she moved up. And I'm sure that's was. You can see this imbalance. Look where it came to. Imbalance, filled it, see ya. That's exactly what it done. Okay. So what was this objective after? If you're looking, macro, So if you got into that trade, you could have been like, okay, if I'm going to intraday this thing, just today, I'm going to be looking for yesterday's high. Look at that, 700 pips that you could have got depending on where you got in at. Okay. And where do you think it's headed towards? These equal highs. Once you understand that, once you understand liquidity, once you understand that this market moves off money, your trading will change. Okay. So with that, guys, I want to leave it at that. I just gave you a lot of nuggets. Okay. But before we hop off, what I want you to do is don't forget to like and subscribe. Okay. Because I want you guys to really tune in. We're going to be doing more videos. And also get in the comment section and drop something that you want shot. I want the next person to tell me what they want shot, what they are struggling with. I want to shoot a video on it because I want to help you. Okay. The only way I can help you if you talk to me. Okay. So do that, like and subscribe. Go to our Instagram, go over there and follow us on there. You can ask me questions. Okay. You can drop me charts and I'll grade them for you. You know what I'm saying? I'm here to sell. I'm here to help. We're a servant. Joe and I are servants. So I want to help you. If you're struggling, I was in your shoes at one time. Okay. So, and also go join our Telegram. I'm going to be dropping charts in there so you can grab those, you can copy them, whatever you want to do, and put them into a folder like I told you to do. So you can keep them, so you can study them. Okay. And then you can like mirror them. You can put them up in something, maybe an iPad. And you can be like, okay, I'm only looking for this. I'm going to mirror this setup on my, live chart. So with that, guys, don't forget to do all that. Yeah, that was a lot of nuggets. If you got to watch it twice, it's fine. And yeah, see you guys on the next one. Keep pipping and dipping, guys. Peace.